rightly said, we do have the management of Sanstar joining in with us on their listing day. Yes, they opened up with a premium of 14%. As of now, it's trading up almost 30% in trade. Thank you so much, Shreyans, for joining in with us this afternoon on ET Now. And obviously, congratulations on your listing. But what I want to talk about is you've spoken about how you'll be using your funds. You've spoken about 100 crores being spent towards the debt repayment side. So how much will be the saving in terms of your financial cost? Could you highlight a bit more in terms of that?
The company has very low long-term debt, almost 36 crores only on the books as on date. So we are doing a 100 crores repayment total in total long-term as well as short-term. So going ahead, we anticipate around 10 to 15 crores of saving on the interest account, as well as hopefully within the next 1 year, we aim to be completely debt-free. Definitely these savings should start flowing in.
Point taken. Hi, this is Anisha also joining in the conversation. Could you throw some light on how the overall current demand environment is like, and more importantly, what could be the big growth drivers for the company from here on?
So within the food space are the segments where we are catering to, such as the sauces, ketchups, gravies, etc., noodles. So these are the segments that are all experiencing a very fast growth rate within the segment. Additionally, a lot of new applications are also coming in on the food as well as on the personal care, on the fermentation. The company almost did 400 crores worth of exports in FY24. We are seeing a lot of new demand globally coming in from new markets, new geographies, as well as the global consumer behavior trend that is shifting onto plant-based and the vegan boom on the food, on the clothing, on the leather side. So these are just few examples. So all these on a cumulative basis is all aiding to a very good demand for the company. The company has carved a very good name in the food as well as on the export side. And so we see a good robust potential for our products going ahead.
Right, so you did highlight a bit in terms of the exports, right? 400 crores in FY24. You've seen a sharp growth versus the last couple of years, and now it contributes around 35% to your revenue contribution. So what is it in terms of the growth that is you're expecting to see for exports going forward? Any internal target that you're seeing, and how is the inquiry shaping up from clients?
So, like FY24, we were 400 crores worth of exports. The demand and the potential that we see, and the fact that a lot of big economies or geographies are now wanting to tap our products, Sanstar products. So, we are fairly confident of maintaining the current share between 36 to 40% in terms of total revenue. Going ahead, we anticipate, because the capacities are doubling and we are well slated to complete our expansion by June 2025. So going ahead, we are also aiming doubling of exports with the new capacities online.
Okay, since you're talking about exports, any specific new geographies that you're targeting there?
So a lot of new geographies are already tapping up. Some of the companies are also willing to link their strategic sourcing from India. So there is potential from new geographies, including the larger Western markets going ahead.
Right, and also just in terms of the capacity, if you could talk to us about that as well. The Dhule facility, you said that you've already started in terms of the capacity planning over there, and it's already under construction. So yes, when will it be operational by, and what is the additional revenue expected from this facility?
So the work has already commenced. A lot of ordering has already been released with the past experience of the promoters and the management and the historical execution track record. The company is well slated to complete before June 2025 the new capacities. So we anticipate at least 70% of the expanded capacity to start flowing in on FY25-26 numbers.
Okay, a lot of capacity is coming up. You've already managed to double your revenue as compared to FY22. Now, given the new capacities and the tailwinds that you're talking about, what kind of growth rates one should envisage for the coming few years?
So the company has grown almost 45% CAGR over the last 3 financial years. With the doubling of capacities, we are well slated to maintain the same growth in terms of top line expansion over the next 3 years as well. The demand and the overall economy is aiding for the growth in Sanstar products.
Right, so obviously with the strong growth expectation that you have from the revenue front over the next few years as well, 40+% in terms of CAGR, what is the growth that one could also see in terms of the profits? Currently around a 67 to 70 crores. So where do we see the profits as well as in terms of margins, 9% levels, or do you expect higher levels for margin?
So majority of the expansion is also happening on the derivatives, the second generation higher value added products for the maize based specialty products we make. Some of these products are also raw materials to pharmaceutical applications. So going ahead, we do anticipate EBITDA expansion due to this. Also because of the recent investments that the company has made on the renewables, on the solar and the biogas based electricity plants. So, and the cumulative at 1750 tons per day at Dhule will be the single largest plant at a single location in India. So, all these three factors combined are very well slated to aid on the EBITDA expansion going ahead.
Okay, on that note, we let you go. Appreciate you making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.